Hello everyone, I am Miss Saili Jadhav, Department of Civil Engineering. Okay, so in last lecture we are learning advanced payment. So when we revise that advanced payment, okay, the work done is not measured or made of special cases. If work is done but the measurements are not taken, the advanced payment has to be applied. Then there are the types of advance payments. The first one is secured advance, second one is temporary advance, third one is petty advance, and fourth one is mobilization advanced. Okay, now here we start. The first one is secured advance. The advantages to contractor is a general rule is prohibited, but with the help of contractor to keep up the progress of the work, these are permitted. It is an advance payment made on the security of material brought on site of work to a contractor. In the interest of work secured, advance may be allowed by executive engineer. The executive engineer to the maximum of 75% of the value of materials brought on the site. Okay, so there are some conditions for such payments are the contractor should be for completion complete item of work. Now the next one is the material brought on site of work should be imperishable nature. An agreement is to be signed by contractor before advance is sanctioned. Okay, the engineer has to give certificate that the materials are required for the work and are of imperishable nature. No advance is permissible on material like sand, lime, coal, surkhi, etc. The detailed account of advance is kept. Form 26A is attached and attached to bills. The advance amount is adjusted in the next running account bill is proportionately to the actual consumption of material. Okay, so this is your secured advance. Now the next one is petty advance. Now the petty advance, it is a small amount advance to the engineer in charge for purchasing material in a case of emergency. The quantity of material to be purchased should be less and cost of the materials should not be more than rupees 10. In such cases, the quotations and approval are not required. Petty advance is the amount given to the engineer in charge for purchasing material in case of emergency. Okay, the engineer in charge may use this advance in purchasing material and in small quantity and which is small quantity and which is not costly. In advance, in this petty advance, the quotation and approval are not required. For suitability of this petty advance is for purchasing material in case of emergency. After expenditure of first taken petty advance, new petty advance is granted. Now the next one is mobilization advance. So the mobilization advance is before starting any civil engineering project, certain establishments are required like approaches roads, labor huts, places of storage of material, site offices, water and electricity facilities, etc. So these establishments ensure the proper use of resources and efficient and smooth working with safety on project. This is called as mobilization. The amount of money given above establishments by department to contractor is called as mobilization advance. This advance is given to contractor when he asks to the department in writing and after the payment of his security deposit. It is the paid only after the payment of security deposit by contractor to the department. Now the next one is first and final payment. Now in first and final payment, in this case of small works of short duration where the preparation of interim bills is not necessary, the contractor is paid the whole of the tender sum is only one installment. That is, on completion of work PWD accounts form number 24, first and final bill is used for making the payment. This type of payment is usually made or applicable for small works. For example, the construction of sanitary block for school building, the component wall construction, septic tank construction, ornamental grill work, demolishing existing structure, etc. This form is used making payments to supplier. If the whole of the amount is to be paid in one installment on receiving the goods, bill of several contractors and suppliers can be prepared on a single form if the payments relate to the same head of the account. This is your first and final bill. This is your form number 24 is used for it. Now the next one is interim payment. So the interim payment is a practical payment given to the contractor monthly for works in progress or a supply in progress under the terms of contract. Is called as interim payment. The payment is made of work at convenient intervals subject to final settlement is termed as interim payment or running account. Always it is good practice to make a periodical payments to the contractor during the progress of work. It is not fair on the part of the department to expect the contractor to invest the amount and to wait for payment for 2 to 3 years when the project is large. If the interim payment are not made, the progress of work cannot be maintained. At same time, as per the contract clause, the progress of work should be proportion to the time of the completion. If the bills are made at the intervals, we can ascertain whether the progress is proportional or not. These certificates show the approximate value of work. The payment made under this certificate are provisional and are subject to adjustment and readjustment at the end of the contract. The bill is then submitted to executive engineer where the divisional accountant checks the bills and verifies with the tender and passes the bill for payment. Thus the contractor will receive the payment in the first week and week of every month. The amount payable shall be 90% of the sum obtained by applying tenderist rates to actually measured quantities of the work. The interim certificate does not guarantee that the work executed are proper. So the interim payment is form number 26 is used for all running bills. The powers are given to the engineer to hold the interim payments under special circumstances. Now the next one is retention money. Now the department withholds about 10 to 15% of the monthly payment to the contractor to have an additional hold on the contractor so that he will not be encouraged to abandon to work where nearing completion. In event of security amount being insufficient to cover the claims, then the engineer in charge will hold some amount as retention money till the claim is adjusted. The purpose of retention money is to rectify the defects. Any work left out can be executed by this amount and to meet the damages if any. This is not a compulsory and arises very rarely. It has no relation with the tendered amount but depends upon the claims against the contractor. Retention money does not carry any interest. This amount is refunded to contractor after defect liability period is over. Okay, so this is your retention money. Now the next one is reduced payment rate. Reduced rate payment. So sometimes the contractor may fail to carry out the work strictly as per specifications, plans and drawings. But the engineer is of the view that the work is structurally sound, but finishing item is not as per specification or as per actual drawings. For example, item of painting to door and windows consisting of 3 coats of painting of a particular brand, but the contractor has used to paint of another brand of lower quality, then this item will paid unsuitable and reduced the rate. So this is your reduced rates payment. Now the next one is e-payment. It is an electronic transfer of money from a bank account, usually checking account, without the use of paper check. E-cash is a form of electronic payment system where a certain amount of money is stored on a client device and made accessible for online transactions. So e-payment is nowadays used. Okay, so usually this checking accounts of use for a paper check. So here is the forms used in PWD. Standard forms used in PWD, that is white forms is used as a running bills and the yellow forms that is used as a final bills. Okay, so these are the list of bill forms. Okay, form number 24, that is your first and final bill. So this is the form is used for making payments to the contractor both for work and supplies when a single payment is to be made on the completion of the whole work or a supply as a final payment. Now the next one is running account bill A, form number white. Okay, form white, running account bill A, form white, form 25, that is white color. This form is used for advance payment without any measurement for works only. It may be used for running bill payment, for advanced, for unmeasured work only, for a combination of unmeasured work and measured work, or if an on account payment is to be made but an advance payment is already made for same work outstanding. Now the next one is form number 26, that is your running account bill B, that is in white color. Okay, so here you see white color is running bills. So this is used in secured advance payment for works only. This form is used for running payments partially for secured advanced and partially for measured work. Okay, that is the combination of secured advance together with other payment. Now the next one is form number 27, white running account bill C. This form is used for making on account payment or running payment for measured works or supplies, that is for both works and supplies which are measured. Payment of first running and second running, etc. for measured works or supplies are made on this form. It is not to be used of an advanced or a secured advance payment is to be made, or if such advance is outstanding against the contractor. Okay, the next one is form number 27, yellow, final bill C. Okay, this is the final payment when no advance is outstanding and when the intermediate payments have been made on this form. Okay, then the final bill number 27B, final bill. So this form is used for making final payments to contractors on lump sum contract. Now the next one is measurement book, form number 23. In last we see the measurement book and its advantages. Now the nominal muster role, that is form number 21. Okay, and the next one is impressed cash, that is your form number 2, and the cash book, that is your form number 7. Okay. Then the hand receipt, form number 28. So on that hand receipt, this is a simple form of voucher and intended to be used all miscellaneous payments and advances for which no other form is suitable. Usually petty payments are purchasing or for any other purposes are made on this hand receipt. Okay, so here we completed our 4th chapter, that is accounts in PWD. So in this chapter we learn there are lots of bills used in PWD for our accounts. So this is the format of accounts used in PWD. Okay, thank you.